Otsukimi here. Who else would it be? This is Observations with Otsu. As you guys know, I talk about the weekly time frames for Bitcoin, Ethereum, and some other coins if I have time. But the whole video structure is designed to get the context for the rest of the week. So if we don't focus on the weekly, I don't think the rest of the time frames really come into context like it should be. So we're going to kind of go over those. I got some preliminaries. The theme of this video, as I mentioned last week, I'm gonna replace the 4 hour with I'm just gonna remove the 4 hour and lower time frames from the videos from now on. I'm gonna replace them with themes because if you want 4 hour time frame content and lower, I talk about 1 hour time frames as well in the mini market updates in Knowhere. That's my Discord channel. So if you want lower time frame analysis, that's where it's going to be. My Discord is free to join. I'm going to have some, premium options as well, so you can look forward to that. But observations is going to continue to be one weekly and one day primarily, and then everything else in my Discord is going to be 1 day, 4 hour, 1 hour, 30 minutes. So a lot of the lower time frame stuff is going to be there because I can answer questions better that way, and my videos can be shorter, and it just makes sense for everyone. I've asked a lot of people about this. This is what everybody seems to like as far as a general consensus, so that's good. The theme of this video is going to be the aptitude of risk management, and I made a small poll about what you guys want to see: risk management or ETF news or Bitcoin halving. There seems to be a lot of those three being addressed right now, and I'll kind of go into that pretty much throughout the video. A lot of people are talking about the Bitcoin halving. Are we going to go up before? Are we going to go up after? A lot of people have a contrary analysis for that this time. They think that the price action is going to happen before the halving versus after it. And so that's an interesting debate, but that's not for today's video. A lot of people talking about ETF. It seems like it's back and forth. I'm kind of glad people didn't really vote for that because that one would be the hardest one for me. But the third one is going to be risk management, and that seems to be the one that everyone wants to talk about. At least that was the majority. And I wanted to figure out a way, how can I address that kind of in a weekly video to kind of give a general idea of what to talk about, because there's so much to talk about risk management. And honestly, just the idea of aptitude makes more sense for this video because a lot of you guys, and I'm going to go kind of on a rant pretty much for the rest of this video while I discuss analysis, because most people cannot do risk management. I'm learning this, that it's not just the risk management tools, learning how to improve, learning how to do this or do that. It's just doing it in general, because the price action now is so boring and it facilitates people to be more irresponsible. It causes them to focus on their emotions, their addictions. It's like there's nothing going. It's like social media, right? There's nothing going on Twitter or TikTok or any of these else. So I'm just gonna keep looking in the fridge, so to speak, to see if any food has just magically appeared, right? So it kind of brings on that notion, like, you guys shouldn't be trading right now as much as you should be trading later on when it's healthy. And so that's the idea of risk management as well. It's not just learning your positions properly, it's learning whether you should trade at all right now. And there are some instances where you should trade. There's always a time to trade because that's just how markets work: supply and demand, candles, everything like that. But for the most of you, you should not be trading right now. The biggest risk management that you can do is just not trade right now and wait for positions. Look for opportunities that will happen in the future instead of trying to trade something right now, because your problem right now is that you're trying to gamble. And risk management and gambling does not work together, okay? And yes, you could have risk management while you gamble at a casino. That's a little bit different of a story. What I'm saying is, you look at the charts, you want to buy something because it looks bullish, and I've seen this so much in the past month. Like, oh, this candle looks bullish, I'm going to buy. And literally within 12 hours, you're like, man, this market sucks, why did I buy? And now I'm going to sell, and then it goes up, and why did I sell? It's going up. And so you back and forth, and you flip-flop, and that's the problem, is because you're looking at this as like a gambling tool, and it's so easy to do so. I understand that, right? I can wake up, I don't even have to get dressed, I can get onto my computer, and I can put in whatever number I want, and buy and sell, and make money or lose money. And that is a dangerous thing that anyone has access to, okay? So I understand the idea behind KYC, things like that. That's not what I'm talking about. I'm talking about personal responsibility. I am a big fan of letting people do what they want, but they need to be responsible and they need to have consequences for their actions. Because consequences for your actions help you realize what you're doing wrong so you can stop doing it. Okay? That is the reason. There are so many people, especially in the NFT space, that fumble up their trades and their positions and everything else, and they lose so much money and they don't learn their lesson. Okay, it's all about your learning your lesson. I've learned so many lessons in my life, and that's why I can come to this conclusion. Okay, so that's just a little introduction to what I'm talking about risk management today. I'm going to talk about just the aptitude of it, and I'm going to go through. I got 4 or 5 different things to talk about, and I'll talk about them through each particular chart. So we'll go over the topics as we go over the charts. So it's kind of like a hybrid topical technical analysis per se. And so I apologize if I vent too much, but I'm really frustrated about this, and this is one reason why I'm probably just going to quit in the next 3 years, because I'm already sick of it. I'm sick of the stupid questions. I'm sick of the people not looking at their charts and asking me questions about what's wrong with this, why are you doing this, why are you doing this. Like, first of all, look at the charts, okay? Because 9 times out of 10, if you look here on the side, you're going to see the numbers on the charts. This is the current entry, okay? When I make a position like this, let's say I make a long position, now you got your take profit and your stop loss. It's on the charts all the time, and I get asked these questions. Well, where's your stop? Where's your take profit? Where's my risk? Where can I do risk management? First of all, I'm doing this for freaking free, okay? That's the first thing. So I don't need somebody waking me up at 3 o'clock in the morning asking me a dumb question. Okay? Second of all, it's a dumb question because it's on the chart right now. Like you can see, I've got 4 numbers right here. The blue one is my entry. This one is the current price. This is the take profit. This is the stop loss. When you adjust it, this adjusts as well. It's fairly common sense. And I understand that you might not know it once or twice, but some people have asked me these same questions for years, and it's the same people too. It's not a rotation of different new people. It's people that should have learned already, okay? And if it's you, I'm not trying to insult anybody, okay? It's not like that, okay? My issue is I go out of my way to try to facilitate improvement for people. So this is not about learning how to risk manage. This is about the aptitude, the understanding of it, to have some sort of intelligence when doing it. And I understand that some people are smarter than others, but if you don't know, you just write it down and you go to your notebook. Okay, you don't actually need to have like a good amount of RAM in your brain to understand this. You can use your notebook as a way to facilitate the rules that you need. Okay, so this is what this is about. This is about aptitude. Okay, because it really does seem like some people just don't know how to risk manage, and it's not even that they can learn. It's just like they don't have a capacity to learn, or they don't want to, and it's up to you to decide. Do I know how to risk manage? Like, is this something that I can learn? All right, first things first, we're going to go to Bitcoin on the weekly. We had a bullish week last week. And that's clear, and technically well, obviously all bullish candles are going to be higher than the bearish ones, all right, but it did kind of engulf, so that's good. We also had a higher wick, so that's kind of like So on one sense, the candle body looks pretty good, but the candle wick does not look pretty good, or not look really well. So we're kind of in a chop scenario, but we're kind of a little more reactive than usual, and that's a good thing. Despite the fact that we've had a choppy week and really the past month or two, we're starting to get a little bit of activity. So overall, that's worth noting. We're above the 50 RSI on this. We still got the bearish consolidation on the ARIN, and that's the key here. That's one reason why, from the ARIN perspective, that we are getting a chop, because price action is still bullish. Everything here is telling me the price action is bullish. We have the 200 EMA trend, which I don't really talk about too much, but it's way down there at the $24,000 range, and we're at $29,500. We're almost at $30,000, by the way, and people are still pissy about this price action. Like, this just shows you how frustrated I am and how crappy people are at risk management. Like, you just need to not do anything. Okay? Like, I was so vocal to the point where I'm pissed off now about how I bought at 16,000. I've told people for months to buy there. We spent a lot of time here, and now it's like we're crying about these 2% moves and everything's so boring. Well, my portfolio was up almost double. So I don't know what everybody's talking about, right? But and I'm not saying that to boast or to brag, but I am saying that as a pissed off trader and an educator, because I really told people about this, and I even got blocked by people for saying it. And I understand the foresight, right? I understand how that works in its real time. So I'm not that upset about it as it happened. But now this pretty much the same collective people are like, well, why isn't this moving? Why can't I make money? You had the chance to make money in January. Okay? And all you had to do was buy at some point between November, before Thanksgiving, and before, right somewhere after, New Year's Day. And just buy once. And just buy a little bit with size. And you do not have to trade the rest of the year. And you would be better off than what you're trying to do right now. Okay? So that's what I'm trying to say. I am upset about this because people think they're trying to be smart about trading this really crappy price action instead of just buying. Like, it's like some people say, like, sometimes the dumbest trades are the best. Yeah, that's absolutely right. And sometimes the smartest trades are the worst. Sometimes the smartest trades are the dumbest ones, because you're trying to be some kind of super sleuth about all these, this price action right here on the 30-minute chart. We haven't moved at all. So why are you trading this? Okay? I'm not trading this. You know what I'm doing during this? I'm sleeping. You know why? Because this is a snooze fest. You want to also know why? Because I'm already positioned for a higher move, not this crap. Okay? That's what you need to do too. Some people can trade this, and hats off to them. I respect these people, and I know who they are. But the thing is, you're not most people. I'm not most people. I am not a big, smart trader. I'll be honest with you. I'll be the first to admit that I'm as not as good of a trader as you think that I am. But what makes me a better trader as far as profitability is I know my strengths. Everybody has a strength. You need to focus on only your strengths. Don't try to perceive what is there. Don't try to look for some higher market, echelon of whatever you're trying to make your money off of. Okay, this isn't about margin call movies or any of that kind of crap. This is about you working on your strengths and only your strengths. Avoid your weaknesses. Avoid what you don't know. Avoid the uncertainties and focus on what you can learn. And one of the things that I want to focus on here with this is the volume here is just so low. It's not just that the price action is choppy. The volume is choppy as well. And I mentioned a tweet about this, how this is actually bullish long term, because there's nobody here that really is selling. Okay, because all the sellers have already left. I mean, we got some influx. We have some new money coming in, but it's not much. I know a guy that I've known for 10 years, maybe 6 to 8 years or whatever. But we've never talked about Bitcoin ever. He didn't know that I was. He don't. My trading lifestyle, my Otsu lifestyle is anonymous for both anonymous people and anonymous in real life. Most people in my real day to day don't know who I am on YouTube, and I like to keep it that way. But this friend of mine randomly came to me and talked to me about buying Bitcoin. He bought some. So there is new money trading coming in. I know that there is. But these people they're buying for the future. They're buying to invest. Okay? So this new money coming in, they're not selling. They don't plan to sell, at 28,000. Okay? They don't plan to sell really at all. And that's what people don't understand is, a lot of new money coming in, they don't intend to sell. Okay, so that's the thing. And so you have to realize that the money in this way equals strength, equals value, and for your risk management, for your portfolio, that should mean the same thing. You should not be throwing away your money so hastily at these random bullcrap trades where you're really just getting chopped up in fees. Okay, and that's the second point. Is like every dollar matters, right? Like every cent matters. To me, it matters. I calculate every single thing, every single cent of what I need to use, the trading fees, the liquidation percentages, everything. Okay? And so that's what I look at, because every dollar matters, because $1 now could be $100 in the future for you. And like don't throw away any of your potential investing, your future, nothing, just because you want a quick fix on the market, and then you got to explain to your kids why you, or your wife or your spouse, why you blew up your account. Okay, like, and that's another thing. Like, we have this degen mentality, like that's a fun little joke. No, it's stupid. It's not a fun joke. Okay, I take those things very seriously. Where it, it it's not funny. I mean, you can make a joke about it, but it breeds a culture of degenerate trading. And at the end of the day, what would you really rather do? Would you rather just gamble your money away staring at charts till your eyes become bloodshot? Or would you rather make some money, be bored temporarily, and make enough money to go on a 2 month vacation like I did? Okay, that's, see what I'm saying? Like, again, I'm not trying to boast by that. I'm saying, like, those opportunities were availed to me because I valued them higher than gambling on some candlesticks. Okay, so that's really the first and second point together for risk, for the aptitude of risk management, that money equals strength. So hold on to your money. Capital preservation. That's the whole big point of this structure for Bitcoin, for the Bitcoin analysis aspect of this, is capital preservation. Hold on to your capital as much as you can. All your trades should be about holding on to your money. Okay, it should be. So if we go to the daily, this is something that we talked about before. I talk about this in Knowhere, that we had a wedge and it played out pretty well. And so depending on where you want to put this wick, it would have retested, and we're kind of on the retest point. I'm going to get rid of this EMA. I think most of my rant is probably done for the day. But we also had this trend line here, so my thought process was that we would impulse here, we would kind of glide along down, and we would touch this point. It seems like we're about 75% there, so I'm okay with this. This looks clean. What I think might happen, and again, this goes into risk management, because people are so dumb right now. Like, now is not the time to just like gamble away things. But my idea is that we're actually going to wick down. And so where's this price thing at? We're actually going to wick down to here about 3%. We're going to drop 3% sometime within the next 2 days. And so the A-room consolidation is currently, aiding with this as well. We have a slow bleed, technically, despite the fact that we're up 1% today, I think. Yeah, we're a little bit down now. So maybe the drop's already happening, but this is going to turn into a bearish cross, which means we're probably going to drop about 2 to 3% from here, and people are going to freak out, and they're going to say, oh, everything was so bullish today. And like, I guarantee you there's people that have longed today. Like, I've had people ask me questions about longing, about taking profits and everything. Like, no. Why? Nothing has changed. Okay? So we're going to probably drop about 3% here in the next couple days. People are going to freak out, and that's going to be your fake out. If we get, and so this is the analysis aspect of this. If we get a dip below here, which the 3% would do, would be like right about here, 3.5%. People are going to be like, all right, this failed. We need to get out. And if this reclaims, that's actually your time to long big. And so that's what I'm waiting on. I'm waiting for a drop right in this range. And actually, this works very well with this bullish breaker. So this is what I'm looking at. I'm looking at a breakdown to this level, somewhere between 28.4 and 28 even. Okay, and if we get that reclaim, which looks like we're already getting it on the RSI, that's one of your key things to consider. So that's a key observation with Bitcoin as well. Look for a fake out, because I think that's going to help us kind of regain some momentum. So anyway, that's Bitcoin. We're going to go on to Ethereum and the next aspect of risk management. All right, we're going on to Ethereum weekly chart here. We had another bullish week, but really insignificant as far as the grand scheme of things. I'm going to go between the weekly and the daily because all my levels are here. This is the level I'm looking at. Again, we had the Adam and Eve pattern pretty much back last year. Had the deviation. I'm looking for a break of either the previous top from the Adam and Eve, or a breakdown from the trend line. One of the two, and that's pretty much it. I'm keeping it really simple here. Looking on the daily, this is kind of how it looks. This is kind of my chicken scratch, where I was kind of doing some analysis for Discord. So basically, keeping it very simple. Here's your range low. If this breaks down from the red line, which I would look for somewhere between, basically sub 1800. I think that we could probably go down to about 1650, and that's kind of where I would probably short that down to that 1650 range, or I would wait for a break up above at the 2000 range. Another option is that we could take this, use it as a long signal. If this bounces off of the red line, I'm pretty sure this will break down, but if it wicks back up, then you have something like so. You can target a position like this, and then you have a 3.6R trade, so to speak. And so that's kind of what I'm looking at. If we get a good reaction on the red trend line, then it's actually a long from that range as well, and that's a pretty good one as well. But really, just the main thing with Ethereum is I'm just keeping this simple. I'm looking at two different ranges. I'm keeping it simple, and that's exactly when it goes to risk management. The same thing applies, and that's what I want to talk about with Ethereum. Is that like you need to just have a simple strategy. Keep things simple. Keep your risk management simple. The problem is that you probably are trying to make things more complicated than they should be, and I mentioned that earlier in this video. What you really need to be doing is looking at everything as plain as you can, strip away all the stuff that is unnecessary, and look at the foundational aspects of trading. For the Bitcoin section, we talked about preservation. Okay, there's part of your foundation. What are some other foundations? And I say this all the time. I've had this as a pinned video if you're not subscribed. And that video is 3 ways to make money during the bullish market, and 99% of you will not do it. And the whole aspect is those 3 trades are so dead simple that people won't do them. They're too simple. And that's the thing. Adults don't want to read children's books. I'm learning that while I'm, trying to teach my son. But the thing is, everybody has read a children's book at some point, because they've all been children at some point, right? So that's the thing. Like, what's stopping you from understanding the simplicity of things and understanding that that's a way to make money? Like, I focus on this probably once a month or once every 3 months. Like, trading the 200 EMA is like the easiest thing to do. It's the easiest thing to do. You buy once, you buy like twice a year, 4 years tops, 4 times a year tops, and you can make guaranteed money. So why don't you want to do it? It's very simple. Like, oh, well, it's not making enough money. Well, if you add size, it can. Well, I can't use leverage. Well, maybe that's a good thing. See what I'm saying? Like, you're making things complicated. You want to leverage because you want to maximize your gains. But the problem is, crypto is a world where you can make a lot of money in a short amount of time, but that short amount of time is still too long for some of you. Like, you guys can make a lot of money in 4 years. But for some people, 4 years is too long. They want to try to make it in 4 months, and then they lose all their money in 2 months. So now you're backwards, and then you blame it on the market. You blame it on crypto. You blame it on, scams. But the real thing is you're scamming yourself of the potential to do better. And so that's what I'm trying to say about this point. You just need to keep things simple. And so with Ethereum, as far as a trading aspect, this is how I'm doing as well. I'm looking at these 2 positions. I'm playing the break of the range, and that's basically all I'm doing with that. It's pretty simple. I'm going to go ahead and move on to this one and go on to, we'll do Solana next. And so we'll keep going with this. All right, going on to Solana, a little bit different of a story, for a few different reasons. One, we have the bullish candle that was a little slightly engulfing, not really too significant, but overall, not a bad thing, right? We'll take it. Another thing is we had a pretty good impulse so far today. We'll take a look at that as well. But we have a maintain price point above the 50 RSI. We do have the Aaron bearish consolidation that it is consolidating bearish per se from that deviation, but this is still relatively healthy. We can kind of extend this out, and this is the thing that kind of gets me is like this weekly looks amazing. We did break above this, but we deviated. And now we're maintained below this for now. But overall, this weekly looks pretty good. If we can get above this resistance point at 25.89, basically $26, this will position someone very very healthily for the next couple years, I think. And Solana is one of those coins that I think will probably do well. I can't foresee any reason why it wouldn't versus some other coins, perhaps. At least to give it that consolation. So that's the thing. Like it goes back to the risk management thing. Like in the simple ideas, the simple strategies. Like sometimes it is just as simple as buying here at $25 or even $30, let's say, and waiting until we go back above to the all-time highs. I'm not saying that will happen, but I'm not going to sit here and say, well, oh, but don't listen to me. Though, like I'm not going to try to give you some hard stuff and then be like, well, it's up to you. It's your fault or whatever. Like I'm not saying either one of those things, right? So like I'm not going to try to be one of those guys that say, well, I don't know though, because in some sense I really don't though. So I'm not trying to I know that sounds very convoluted, but I'm not trying to get you to trace your dreams, but I'm also not trying to handhold you either. Like you got to do this yourself. And so it's one of these things like you could, if you bought now and waited till the all-time high, you could get to like almost 9x, and that's pretty good for pretty much a top 10 altcoin right now. And so that's the thing. Like all you have to do is hold it. All you gotta do is buy it and hold. That's it at 30. Like don't buy it right now necessarily. Like I would probably wait till it breaks above here, somewhere in the $28 to $30 range. And again, I'm not saying that you should. I'm not saying that that's a good thing to do or wise thing to do. I'm saying that's a simple thing that you can do if it works out, and much simpler than trying to make that 9x like on the 30-minute chart, right? And trying to navigate this kind of crap. Like this is something that takes one line and just one hold that might take a year or a year and a half. So and that's the thing. Like let's say you have you have $10,000 to spare. Like you wouldn't like making an extra $80,000 to $90,000 in another year and a half by just doing one trade. You either have you have enough money to not care about that, or two, you have too little money to even think about why that's a good thing. So one of the two. So anyway, that's pretty much that. So going on to the daily, we kind of have some resistance, and we kind of wick down a little bit, but this still looks okay. There's nothing to be concerned about, in my opinion. And again, that's the thing. Like a lot of people get concerned about every dang move, and that's another reason why your risk management sucks. Okay, that's why you need to have better aptitude, because you think too critically about small moves. You make big things out of the small things, and small things out of the big things. Okay, and it really should be backwards, and not all the time. It doesn't apply for everything in life, but for trading as well. Like, why are you trying to trade high time frame ideas on 30-minute charts? It doesn't make sense. And then the vice versa is also true. Like if you buy on 200 EMA, for example, don't look at the 30-minute chart to kind of navigate that, unless that's where the 200 EMA is on that. Look at the same time frame. And that's another thing. Like I trade, and I'm very vocal about trading only on the time frame that I choose for the trade. And people give me weird responses about that, and my answer is why. That makes perfect sense. why would you destroy a daily setup because you have a divergence on the 30-minute chart? That makes no sense to me, because it doesn't have an effect as well as other things, right? And so it's like, like in my wife's country, it's literally on the other side of the world, and they'll have typhoons. Okay, they'll have several 2 or 3 typhoons a year. Okay, how does that affect me in the United States? Like, it doesn't affect me physically in the United States. It affects me more that her family is there being affected than it does by me actually being affected. Like, the typhoon is not going to hit us in the United States, not where we're located. And especially where it's at, right? So that's what I'm saying. Like, the world is big enough where I don't have to have that physical concern over that, at least, on a primary level, right? So that's what I'm saying about this. Same with trading. So also another thing too, on the daily, we're above the 50 RSI on that. Looks good. We did cross bullish on the A-run. Looks good. Everything looks good with this. We're not out of the zone yet. I want to get above the 26.24 marker at least, if not above here at 27.52. Other than that, I think Solana looks very healthy. I think it looks at one of the healthiest ones in the market for now. And so I think that's good. We have a little bit of a drop down, but I mean, Solana's still holding up. This is not a concern for me, by the way. Like, I'm not concerned that we went up 2% and then we lost that 2%. I'm not. We're still relatively break even for the day. And that's a prime example of where your risk management comes into play. Like, you should not be freaking out when these flash movements happen. And I say flash, they're just a percentage or two. Like, that should not have changed your scope. If it does, that says more about the integrity of your strategies than it does the market. So anyway, so that was Solana. Last up is XRP, and that'll be the end of the video. All right, XRP, this one's got a position already ready. This is a short position that I talked about in my Knowhere Discord. So if you haven't joined, this is one of the reasons why I think it might be good to join, because this is going... we have gone back and forth. This is not a position that my portfolio was in, but this is one that I've been kind of narrating as we go, and it seems like it's pretty good. So that's the thing about my Discord. Some positions I will do, and I will follow with. Some positions I don't do, but I'll still follow the navigation of that to get you to understand why I do things the way that I do. So if you want something more day to day, that's a good it's a good option for you. And so that also saves me from explaining, because that's another frustration that I've had, is that I will do these things and somebody will ask me the exact same question that I covered in the video, like, watch the videos. That's why I have my Discord. One of the consequences of me having the Discord is I'm going to stop answering these basic questions on Twitter and everything else, is because I do answer them in Discord. I corral people to there because I can talk to literally hundreds of people at one time. So I do encourage you. I know I'm being harsh right now, but I encourage you to do that if you do it, because I do want what's best. And that's why I'm kind of being like the harsh parent right now, the harsh educator, because I want you to do better. And I'm frustrated that the people that actually, there's people that are asking me questions about, and it seems like they want to do better, but they're not, because they don't want to help themselves. Okay, so there has to be a point where you help yourself. So anyway, with XRP, we have this fade attempt. I looked at this from a daily perspective for now. This was the pump up. This is the pump up. Actually, I'll go to the weekly. We had that pump up from the SEC court news and all that. I've been very vocal that is a fade attempt back to the 55-cent range. So far, that seems the case. On the daily, we can see why. We had the range break here, and we had kind of a consolidation. This was actually at one point a bull div, but I think it was on the 4-hour. It was on the 4-hour that deviated below, and it's kind of ranging below. So that's a good sign that we're going to go probably down. If this range break happens and goes back above this line, then I think the 55-cent down move is going to be invalidated officially. So we're going to look at that. But the daily perspective, this looks pretty clean. We are still below the 50 RSI. We got the bullish consolidation. So if this ends up breaking bullish, then it has 2 more candles to decide if it's going to fade again. So time is ticking for the bulls. but they still have about 7 to 9 days to work that out. But anyway, that's pretty much it with XRP as well. Pretty much the only aspect about risk management for this, as far as Aptitude, is you need to maintain this position. But one of the key aspects for risk management for as far as Aptitude is don't change your mind. Once you get something squared away, like, don't change your mind. Okay, you see things in the market, you see changes, you see bull dips, you see market fluctuations, you see the flash pan back and forth right here. And see, we're already up again. See, that's what I'm saying, right? Like, don't change your mind. If you're so quick to change your mind, then maybe you didn't hold your ideas very valuable in the first place. You need to hold them valuable so that way you don't change your mind. So that's another aspect about that. So anyway, that's the whole video. It's been long enough. I hope you enjoyed it. I don't typically vent as much anymore, but I need to get out of my system because there's a lot of there needs to be more competence for traders, in my opinion, and I'm taking the high road. I'm not going to be degenerate about this. So if you got offended by that, I do apologize, but I also that's just how it is sometimes. Like, you need to grow up to trade maturely. You need to understand the rules. You need to separate your dreams, like the dreams versus the harsh reality sometimes, and not always, but your dreams need to be focused on what matters versus speculation per se. So anyway, that's my analysis for today. That's Observations with Otsu, and I hope you have a good day.